Hi, guys. Welcome to Ask Karen and Wealthy Answers. How are you doing today on this beautiful day in Northern Florida? I'm so glad to see Stefan today. We're going to talk about how to use infinite banking when it comes to real estate, all forms of real estate. Stefan had brought up some really great questions. So what I'm going to do is go into each one of them and help people, whether they're buying a home, selling a home, investing in real estate, or thinking about using a hard money lender. We're going to be able to give you the differences between all of them. And this way you can make an educated decision. So how are you doing today?
I'm doing wonderful. How about yourself?
Well, too. I'm blessed to be here, to wake up today and to be able to get into this and help people understand another way of thinking. So
Beautiful.
you had brought some questions up. What were they?
So I had there's real estate encompasses like so much.
Yes.
So I wanted to kind of like niche down, you might say, into like three categories. Um, One category being like fix and flippers or investors, kind of like that niche there. The other niche would be for people who are like hard money lenders. And then like the third niche would be like people like myself that would be, purchasing a home or that has a mortgage currently, and see how infinite banking could help, with those three niches. So if it's all right with you, I'd love to ask the first question that deals with fix and flips.
Okay, go right ahead. I'm excited about this. Go on.
All right. So when it comes to fix and flipping, obviously, there's a lot of capital that's involved. Fix and flippers will often look for the best deal and then, buy the house, fix it up and flip it, right? So how can infinite banking help these people make money when it comes to fix and flips?
Okay, they can do it in a few ways. When you use outside sources, third-party lenders or hard money lenders, you're giving away some of your power and control. And you're also paying more out than you would if you use your own money as collateral. And when I say that, if you have a cash value life insurance, a lot of people call it infinite banking, you can use that money as an asset. And when you use that money as an asset, you retain control of all of the finances within in that deal. So an example is this. I am just wanting to get into real estate. And I'm lucky enough that I had set up a infinite bank a while ago. So I have a little bit of cash value set aside. Now I could go to the bank and I could ask for a loan, but that's going to require my credit be in stellar condition, market conditions, because right now I don't think they're giving out loans that easily. I'm going to have to sign certain things. They're going to have to want to know everything about the deal. So it's a lot harder. And they're going to set the interest rate that I have to pay them. So I'm going to be earning money for them, not only myself, but them, because the interest that I pay is money they earn. Now, if I use my infinite bank, I retain control. I go to the carrier that houses my policy and I let them know that I want this amount of money. They're going to give it to me because it's leaning against my death benefit. And the one thing they know is eventually I'm going to die or I'm going to pay back the loan. So they're fine. They don't care about my credit. I don't have to fill out any extensive documents. I don't have to tell them what I'm doing with the money. I just have to have enough to support what I'm collateralizing my policy for. Now, down the road, let's say market conditions changed. I've purchased a property and I've gotten it 90% done, but the value of the house changes. So it's not going to sell as quicker because the market is fluctuating. If I had a traditional loan, I got a problem because there's a time frame on when that money is due back. And if I don't pay for it, I probably have to lose control of that home because that's the collateral.
Gotcha.
And they're not going to let me off only with that. There'll probably be fees and penalties. If I've used my cash value life insurance, I'm the borrower, but I'm also the lender. So if I can't sell that home for 2, 3, 4, or 5 months, I might not be happy, but it's not going to hurt me financially, even if it goes on for a year, because I'm the lender, I'm the borrower. Now, the good thing is, when the house sells, there's going to be less of that profit going out because I'm the lender. So I'm going to pay that interest that I would have paid to, I'm going to say Wells Fargo, to my own policy, giving me more money the next time I want to flip properties.
So to get kind of like the broad picture, if you will, I would have to have a policy that has cash value within it. Basically, I would borrow from that cash value to purchase the home and make upgrades and whatnot. And then when it comes to repayment, basically I'm paying myself back with that interest. So instead of paying interest to the bank or to a hard money lender, basically that interest is going to myself. So is that kind of like the gist of it?
In a nutshell. And
Okay.
you can start small. A lot of people that start this, they might only be a partial lender in a deal. So they might put $5,000 or $10,000 in with the hopes that their return is going to be, and it's more than hopes, because if they're putting that in, they're going to get. So a lot of people start small and eventually are the entire lender in the deal.
Okay, cool. So when it comes to like being able to have access to that money, I mean, how long does it take to be able to get it?
Usually within 7 to 10 days. 2 weeks at most, you'll know your carrier. I'm dealing with 2 carriers that are between 7 to 10 days. So you have a back office, you fill out the paperwork or you hit a couple of dials. If they have all the right things in their possession, which would be a voided check, they just wire it to your bank.
Okay, cool. Can you share a real story about someone who's used infinite banking to help them buy, fix, and sell houses?
Yes, there was somebody by the name of Sarah, that entrepreneur, and she had a small amount of money in her cash value, less than 50,000. I think it was somewhere around 47,000. And like us, she went to one of those webinars that got her excited about getting into real estate. And somebody said to her she could use different vehicles, and one was cash value. So she went ahead and she jumped in by getting herself a fixer that really needed a little bit more than $50,000 worth of work. So she partnered with somebody, another young woman, and they put money in together and they bought the property and together they fixed it. And she did it at a time where, as you know, real estate here in Florida has skyrocketed. So it was just coincidental that she purchased this property at a time. So they got the property on the market, sold the property. And the good thing was the two of them were able to keep 90% of that profit, because the money that went into it was from their policies. So they basically had to repay the loan that was taken out, but I think it was $30,000 each that they were able to pocket after everything was said and done. So they've been doing it now quite often, getting involved in, now they're doing, I guess, what do you call them? Airbnbs. I don't know how those are going. I haven't been in touch with them recently, but that's where they were. They thought that holding on to a property and using it in that sense would be, but it's something I would love to do. I just don't have time right now.
All right. So, I mean, this is a nice little creative tool that could be used. I mean, obviously there's, different means of, purchasing homes, but this is, something that fix and flippers can use. So as with everything, there are hidden dangers, if you will. So the next question I have is, what should people be careful about when they use infinite banking for house flipping?
Well, just using infinite banking in general. Number one, you better go with an agent that you trust, that has a good knowledge on infinite banking, that's going to be there with you to answer your questions and adjust things as you grow and help you understand the different ways you can use your policy. The next thing you want to make sure is that you have a tax advisor that's knowledgeable in real estate, because I don't know, even though I've done real estate in the past, every state is different and real estate changes. So you want to protect yourself by knowing, based on your financial makeup and your state, what is needed. Know that when you don't pay back your loans, you're taking away your death benefit and you're taking away your power. So you need to also want to capitalize. You want to use it. You can let it sit there, but if that's the case, just get a whole life policy. So you want to be able to capitalize. And the other danger is stealing from yourself. There was a question that I had seen come over when we were talking before this that said something like, how could I pay less? Why would you want to pay yourself less? Because when you're paying back the interest, you're paying yourself. That's your savings. That's what's growing your wealth. That's stealing the peas. And that's a comment that's in the Become Your Own Banker by Nelson Nash. I didn't understand it when I first saw it, but it makes sense. We tend to want to pay ourselves less than we would pay another company. The point is, you pay yourself the most you can pay, because that's savings. That's money that's now going to compound and continue to be used and grow your wealth. It's just knowing what it is. What do you have in your hand and how to use it correctly? And do I have people around me that are going to support me? And am I going to be disciplined? And I'm going to be responsible, because I am the banker, and that comes with responsibilities. But that's basically your only dangers with having a whole life policy, because that's basically what it is. It just has a cash value component.
Okay. And then for the last question, when it comes to our fix and flippers, oftentimes they'll have lenders that they prefer going to because they can get the cash fast. If they choose to go this route, why might they prefer to do infinite banking versus going to like one of their lenders?
Well, you'll get it faster. As long as infinite banking is not a get rich quick scheme. So as long as you have that much money to collateralize, you can get that instantly. If you want it overnighted, pay a couple of dollars, you can have it wired to your account. If you want to go the regular way, you can just have a direct deposit, which is going to take you 3 to 5 days.
Okay.
If you go to a lender, I don't think it's going to be that quick.
Okay. So, I mean, it could take as long as 3 weeks to get it, or if you want to pay a little extra, you could get it like, 3 days or something like that.
Yeah. Let's say you run into a deal and there are multiple people ready to bid, you can reach out and get your money in your account for, I think it's $35. It might have gone up with inflation, but that was the rate the last time I looked, and they will overnight it to you so that you have it to grab that opportunity.
Beautiful. All right. So all you fix and flippers, this is something to keep in mind, another little creative financing option there for you. Okay. So the next section that we're going to get into is the hard money lenders, the people that, have bigger pockets, you might say, or deeper pockets. So what does a person who lends money for real estate do was the first question. I mean, I guess that's pretty very evident. How can they use infinite banking to make more profit?
That's easy. There was an example of a hard money lender we had, and I think they had about $1 million of cash available. Now, luckily, my mentor got to them and was able to create a bank for them. So now, instead of just taking cash out of their account and loaning it to somebody, they take a loan from their policy and loan it out. So their money is still earning compound interest plus dividends, and it's working by somebody else using it. So think about that. Either you just give your money and wait till you get it back with interest, or you give your money, if you're using your policy, knowing that same dollar amount is earning compound interest plus dividends 365 days a year. So the outcome is going to be phenomenal for the hard money lender that uses a policy versus just giving out cash.
So basically, where they're parking their money, it definitely matters. So I
Oh,
mean, a typical bank, you'll get, the measly like 0.01% or whatever, right?
yes.
But when it comes to like the policies, there's a guaranteed rate, whatever that may be. And then at the end of the year, because it is a mutually owned, type thing, there are dividends, like you said. So it's a win-win-win type of situation, for hard money lenders.
Yes.
All right. Second question: lending money for real estate needs. I mean, I should have gone over this a little bit better. I apologize.
That's okay. This is just, you had brought up some great questions, and this is just us getting those questions out there.
All right. So lending money for a real estate needs a lot of money upfront. How can infinite banking help lenders have enough money to lend?
Well, you're going to have to set yourself up. Now, when you start an infinite bank, granted, it is started. Now, you can fund it with large amounts to get it started. But if you're like the average person like me in the beginning, you're only putting a few hundred to a few thousand in there. And that's not going to be enough really to get you started. But if you're willing to capitalize, and that means if you're willing to use your policy to run your lifestyle, and that means pay off your debts, that means more money's coming into your policy. Use your policy when you're doing any big ticket items. That's more money coming into your policy. And it means your policy is growing at a faster rate. Another way that businesses do it is save your tax dollars in your policy. And then when you're ready to make your tax payment, take a loan and pay your taxes. I mean, most of us that are in small business and some of us that are just regular humans have a large tax bill, but you can capitalize on that. That means that instead of you having to wait 2, 3, 4, 5 years, maybe in 6 months to a year, because you've been running all the money through your policy, you're going to start to have enough to really get involved. So that's how. But yes, it does take preparations. It's not a get money quick scheme, but there are ways to, if you're like most Americans and have 30, 40, $50,000 in debt, we can show you a way to turn that debt into an asset so that you can start using it to flip homes, to whatever you want to do with it.
Okay, beautiful. And then do you have an example of how a hard money lender could use infinite banking to make more money? I mean, like numbers wise?
I do have one. I didn't want to really show it. It's basically just by keeping the money in the policy, knowing that that policy is earning on average 5.25% daily, plus dividends. And those dividends are usually high. Some of my least wealthy customers, someone like me, on a yearly basis, for having a few $1,000s in their account, are earning $2,000, $3,000, $4,000 on the money in there. So if a hard money lender has the money in their account, the numbers that they'll be receiving at the end of the year outweighs anything that they'll ever get in the bank. Now, their money is there. They're really using other people's money as their hard money lending tool. They're not really using their money as a asset, it's a collateral, but they're using the carrier's money, and they're using it at simple interest.
So that goes right in line with the next question. Why is infinite banking safer for lenders, and what happens if things go wrong?
If things go wrong, the only thing that happens is maybe a year or two, we get a recession or something happens. Nothing. Nobody's going to be calling them. There's no stress. Now, if they pass away during that time frame, the only thing that happens is that amount that they have outstanding is taken off the death penalty, if I can speak English, before it's dispersed to their heirs. But if the way our cycle works, maybe something happens and somebody finally sells a home. They pay it off when they want to, because when you become the bank, you make the timeline, and there is no penalty for doing it 2 weeks or 2 years.
And then the last question, which goes right in line with the tax benefits and stuff like that, obviously there are. You'd want to talk with, a real estate attorney maybe, or a tax accountant, somebody that, knows about those type of things.
Oh, definitely. Whenever you're in business for anything, you want to talk to an attorney to make sure that you're doing things correctly. Now, when you're dealing with money and insurance, two of the most important things in our lives today to keep us all going, you definitely want to know that you're following the rules and you're protecting yourself and your family. So yes, that's important.
Beautiful. Okay, so the last subject talks about paying off mortgages and saving money. For a lot of people, we know that, well, actually, that's one of the other questions. I'll zip it when it comes to that. First question is, how can people pay off their homes loans faster using infinite banking?
Well, that's one of the first ways I started with infinite banking. I started with helping people that were like you or me, owning a home and wanted to own their home quicker. So with a infinite banking policy, if you run it right, you can pay off your mortgage within 5 to 7 years. In fact, you can pay off any large, if you have student loan, HELOCs, cars, they can get paid off in 5 to 7 years. And the way that happens is this: when you start with your bank, again, like I said earlier, it's not going to have a lot of money unless a couple of my clients have put 20, 30, 50,000 in all at once. And that's great, but that's not the average person. The average person starts out with, 1,200, 2,000, 500, depending on where they are in their life and their finances. The way to make it grow is to use it. So if you're using it, if you're gathering up those credit cards, and as you have enough in your policy, paying it off, that becomes money coming to you now. Because if I have a Wells Fargo loan out and it's on my debit or the credit card, I should say, and let's say it's at $8,000. So as soon as I've saved up $8,000 in my cash value, if I pay that off, the money that I was sending every month to Wells Fargo is now coming to me. And if I do that with each debt I have, that's money that starts to accumulate in my cash value. Now, credit cards usually, in most cases that I've seen, start getting paid off in the first 3 to 5 months. And usually within a year, credit cards are gone. So that means whatever you were paying out in credit cards is now savings for you on a regular basis. Now you're working on your car. Once you pay that off, whatever you were paying for your car, now I've looked at car payments lately, they are no longer $200 and $300. They're $400, $500, and $600. So that's money you're paying yourself every month. So that's how you can pay off your real estate in 3 to 5 years, just by following a system using your policy as collateral.
Okay, beautiful. So we have a little background noise back here. If you see my face,
I don't hear it.
all over the place.
Hey, you're a family man. You're gonna have that.
Yeah, we got a little bit of that going on. So, in regards to paying off your mortgage early, there's been advice not to just pay that directly to the mortgage company, because basically it kind of leaves you in a bad spot if you're not able to pay, the mortgage in the future. So the third question I have here, the second one, is what steps should someone follow to pay off their mortgage quicker with infinite banking?
And you're right. You don't want to pay any debt off partially. You don't want to take $1,000 and give it to your mortgage company or a credit card company, because you know how life happens. You're really wanting to do good. You want to get out of debt, but something happens. If you do that, giving cash to your mortgage company, and then God forbid you lose your job, you get sick, or something happens, that mortgage company is not going to turn around and say, oh, I know you paid up, why don't I give you back that $1,000 now while you need it? No, the only way you're going to be able to get that $1,000 back is if you take out a HELOC or finance your home, refinance your home. That costs, there's a closing cost that puts your timeline for the ownership of your home out further. That moves around the interest rate. If you take your time, that money that you thought you wanted to throw to the mortgage company, throw it in your policy. The reason being, let's say something happens. You can use that money that you wanted to use for your mortgage right now, because the dog got sick, and you know how pet expenses can be. Oh, I'm experiencing that right now. And when you get back on track, that money is still in your account. So you're still on track to pay off your mortgage, but you still had it to use for other things. So I tell anyone, never, if you get up one morning and you're determined to pay off any debt, paying it off yourself directly the traditional way, that's great. You paid it off, but you don't have the money anymore. But if you pay it off using your policy, not only have you paid off that debt, but you still have that money earning compound interest and dividends. That's why I love infinite banking. When I finally got the concept, infinite banking is simply this. Every dollar that you put into your policy, or you cycle, or what do they call it? Cycle through your policy, is your money for the rest of your life and is passed on to your heirs. And it's collateral, it's an asset. So it's the difference between earning money to pay off debt and live on, or earning money to turn into an asset to continue to churn in your system and to use to run your lifestyle. Which would you choose?
There you go. So I think it's a pretty clear winner when it comes to that. And then have you seen anyone save money and finish paying off their house early using the infinite banking idea or program?
Yes. There's a woman in Florida. Her name is Helen. Her and her husband. In fact, it was in the beginning of my introduction to infinite banking. They met my mentor at the library. And they really didn't go there on their own. They were drug along with people that they had gone to events, so they felt obligated. So they went. But after they heard what infinite banking did, they thought it was a light in the turmoil they were going through, because they were in their late 50s, getting ready to turn 60, and they were in tremendous debt, about 17 credit cards, a HELOC, a mortgage, and a car loan. And they thought that they were going to end up being the greeters at Walmart because they couldn't see how they were going to retire. He had been in construction. She had been not a nurse, but the similar to a nurse. I don't know if it's an RN, but she worked in the nursing industry. So they made good money, but like most of us, life happened. He injured himself for a while. There were car issues. They had to help their children out at a certain time. They were in debt. Okay, so they listened to what was said, and they decided, because the person introducing it to them, they trusted, we're going to go in. Now, she brought up later down the time that she was working through this, that she felt sometimes like it might be illegal or something, but because she trusted the person helping her, she just followed the system. And even during times, because life happens, there are times in anything we do that you have bad times, she still made it a priority. Well, now she started this in 2019, all the way through COVID. And she came out in 2021, and the only thing she owed was her car payment, which she paid off right then. And she had her HELOC to pay off, and then her mortgage. So the 17 credit cards were gone. And she was excited because she started getting money, and she didn't know what to do with it because that was all the money going out. With a little bit of, I want to say, commitment, she paid off that HELOC in 2021. And in 2022, she paid off for her mortgage. Now, they're excited. They're in their 60s now, definitely. They know they're going to retire. They don't have to worry about, what that Walmart, badge would look like. And, they can think about what they want to do. They want to get some more policies. They don't know whether they want to take them out on themselves or if they want to take on their grandchildren, but they're just excited. So for me to watch this average American go from total, fear of the unknown of her retirement to relaxation and just joy, it put a fire behind me to try to get this in the hands of as many people as I possibly can. In fact, for myself, through COVID to now, even though I've had my ups and downs, if I can speak English, I have to say, being able to know that infinite banking stops me from going into massive debt is phenomenal.
That's awesome. Karen, I thank you. I mean, is there anything else that you would recommend when it comes to like real estate niches and infinite banking?
There are so many great ways to get into the real estate market, and you and I can get into that at another time. My thought for everyone is go out there, do some research, look up infinite banking and do some deep research. You'll find that it is such a simple process to change your finances. And if you have any questions, Stefan and I always put our contact information below each of these podcasts so that you can reach out and just ask a question. And no, I think that your questions were, that's why we decided to do this today. I think your questions were spot on to help people take off the veil when it comes to traditional lending and infinite banking.
There you go. And just from looking at the numbers, guys, I mean, honestly, you know, I'm a numbers kind of guy. You know, I like seeing like the fine details and all that. When you look at it at the end of it, basically it just makes perfect sense. So if you're kind of questioning on that, you know, take Karen's advice, you know, look into it, and you'll see, you know, that it's you know, legit. So
right. Well, what I'll say to everyone, if you want to see numbers, because I don't have to see, I sort of go on the energy from the person that's presenting it to me, and then I do my research. But I do have a slideshow that gives you numbers so that you can get that number feeling. So send us a message and I will get that over to you so that you can see the numbers for yourself if that's the kind of information that helps you understand.
Sounds good. Karen, thank you so much for your time. I greatly appreciate it.
Okay, thank you. I hope you have a wonderful rest of your day today, and I look forward to talking about another subject in the future. And everyone else, have a wonderful day today. Thank you for spending time with us. Bye now.
Bye.